compliance ecosystem capable of supporting Nigeria's broader fiscal and economic reform objectives.
The Executive Secretary of the Nigeria Extractive Industries Transparency Initiative, NETI, Honorable Musa Sarkin Adar, paid a courtesy visit to the Executive Chairman of the Nigeria Revenue Service, NRS, Zak Adedeji, at the agency's headquarters. During the meeting, the agencies explored stronger collaboration aimed at enhancing transparency, accountability, and revenue generation in the country's extractive sector. Ejura Etu Opanachi reports.
The engagement between NETI and NRS points to a growing recognition that effective revenue mobilization requires closer collaboration across government institutions, with the extractive industry continuing to account for a significant share of public revenue. Stronger coordination between both agencies could improve the quality of data available for assessing, collecting, and tracking revenues from the sector. The partnership is expected to enhance the government's ability to identify reporting gaps, reduce revenue leakages, and improve accountability in resource governance. For policymakers and industry stakeholders, the initiative reflects a growing emphasis on institutional coordination as Nigeria seeks to maximize returns from its natural resources and reinforce long-term fiscal sustainability.
And that's a wrap on the news. Let's join Mariam on the Vox Pop segments.
And welcome to the segment. My name is Mariam Julde Adura. There are other returns expected of a taxpayer besides the annual CIT returns. Want to know what these returns are? Come. What are the other returns expected from a taxpayer besides the annual CIT required by the new tax law?
Okay, the other tax returns that are expected for a taxpayer to pay or filed aside CIT is value-added tax, that is the monthly returns before the 21st of every month. Then also those companies that are enjoying tax incentives, they are also expected to file their tax incentive returns every year in accordance to the new tax law.
According to the new tax act, every taxable person or companies are supposed to file a value-added tax every 21st month of the previous month. You are supposed to file your value-added tax, either you are a collecting agent or you are withholding for the government. Then you are supposed to file your withholding tax. Your withholding tax every 14th of the previous month. Whether you are an individual or companies, you're supposed to file. Then the relevant companies that are enjoying tax incentives are supposed to file their annual returns at the end of every month.
According to the new tax law, there are other returns that taxpayers are supposed to file. Those that are enjoying incentives, they are supposed to file their annual incentives together with the company income tax. And also, the mining companies, if they are into quarrying or mining of mineral resources, they are also supposed to file their annual royalties together with the CIT. And also, apart from the CIT, taxpayers are supposed to file their monthly VAT. They're also supposed to file their monthly withholding taxes.
What are the other returns expected from a taxpayer besides the annual CIT under the new tax law?
Okay. Under the new tax law, we have other companies that have been enjoying incentive. For example, companies in export processing zone. You know, when you're in export processing zone, when your goods are 75% for export, you are not supposed to pay company income tax. You are given an incentive. And pre-trade zones too. You understand? Yes. The government, in its wisdom, decided to create some zones where it is called pre-trade zone, outside the custom area. Companies that got licensed to operate in this kind of businesses are also free from company income tax. But because they are exempted, does not mean that they will not file income tax return, because the law is clear. All companies, without exceptions, are supposed to file annual returns to the government. 6 months after accounting debt. Not only that, we have other NGOs, non-governmental organizations, that whose income or whose revenues are not for profit making. They are for humanitarian, we call it humanitarian agencies. They are for the public, for public goods. These companies too are expected to file returns to the service because it is a duty of the government to know what is happening in the economic sector for the purpose of data collection, for the purpose of monitoring other indices that are of macro nature.
Did you know, besides the annual company income tax return, taxpayers are to submit a number of other statutory returns depending on the nature of their business? For more information, visit www.nrs.gov.ng.
Ashu Abe takes us on the Knowledge Zone.
Hello and welcome to Knowledge Zone, where we dive deeper into the interesting conversations had on the streets. I remain your host, Ashu Abe. On today's episode, we'll be answering the question, what are the returns expected from a taxpayer besides the annual CIT, according to the new tax law? Besides the annual company income tax CIT return, the Nigerian Tax Administration Act 2025 requires taxpayers to submit a number of other statutory returns depending on the nature of their businesses. These include monthly VAT returns where applicable, withholding tax returns for taxes deducted from payments, and returns relating to taxes withheld or collected on behalf of the Nigerian Revenue Service. VAT registered taxpayers are required to file monthly VAT returns on or before the 21st day of the month following the transaction period, even where there were no taxable transaction nil returns. In addition, employers are required to file annual employee payee returns with the relevant tax authority, while taxpayers may also be required to file returns relating to specific taxes or transactions applicable to their businesses, such as mineral or petroleum royalty returns where relevant. The new tax law therefore places emphasis on continuous compliance throughout the year, rather than limiting a taxpayer's obligation to the annual CIT returns alone. Over to you, Lore.
And now to our professional insight segment.
My name is Kehinde Kaje Shomo. I am the Director, Competent Authority, so I more or less supervise and coordinate international tax policy function on behalf of the Nigerian Revenue Service. We collaborate with the Ministry of Finance, the Ministry of Justice, Ministry of Foreign Affairs, and other relevant agencies and relevant functions in the negotiation of tax treaties and other tax agreements, for example, exchange of information agreements on behalf of Nigeria. Then we also collaborate with other bodies, including national assemblies, in processing and domesticating those agreements to ensure that they enter into force in Nigeria. So it's not just about negotiation, but ensuring that the agreement enter into force. Then after entering into force, we move to implementation stage. We also collaborate now with other agencies and other functions within the Nigerian Revenue Service, and also the competent authorities of other treaty partners to ensure we implement the provisions of the agreement. And there are many provisions in the agreement, ranging from eliminating double taxation, assistance in collection. We also have exchange of information. We have mutual agreement procedure, which is dispute resolution process under the tax treaties. So my office coordinates all those functions to ensure that we have effective implementation of the tax treaties. And in also doing that, we issue tax treaty rulings and also advanced rulings. For instance, we have a non-resident that want to take advantage of the treaty we have between Nigeria and the country of that person. We look at the request and provide ruling on the qualification, whether that person is qualified to take that treaty benefit from Nigeria. And for our own residents also that want to take treaty benefits from abroad, they need a document we call certificate of residence to show that they are resident of Nigeria. Because under the tax treaties, you cannot get benefit from the treaty without being a resident of one of the two contracting states, one of the treaty partners. So for our resident to be able to take benefit, they have to come to us and says, oh, I want to take treaty benefit from so and so country. I need evidence that I'm a Nigerian resident, and we issue them certificate of residence. So there are so many. But let me just stop here because we have, for instance, we also do what we call, we negotiate advanced pricing agreements for advanced transfer pricing ruling. So many. For some of our taxpayers, they must have heard what we say. We talk about base erosion and profit shifting. They must have heard digital economy, taxation under digital economy, and all this involves some negotiations between Nigeria and other countries, either under the United Nations or under the OECD. Sometimes we have such negotiation under the ATAF. So all those discussions where standards are set, where policy are made, where issues are discussed, it's my function or function of my department to represent the service or represent Nigeria in those discussions. And for taxpayer, one important area that we ordinarily, because my function is policy, we most times don't interact with taxpayer. However, the one area we interact very well with taxpayer is the area of issuance of certificate of residence. Because as I said earlier, before they take these treaty benefits, they have to come to, because the other country will not give the benefit, they have to be sure that you are a resident of Nigeria before they can give you benefits. So they have to come to us and obtain certificate of residence. Of course, when I say come to us, it doesn't mean they will physically come. We have a dedicated process, emailing process, where they first go to our website, they download the form, the certificate of residence form, they fill it, they attach relevant document, they can send it to us via email, we treat, and we'll respond to them. So we don't really meet them physically, or we don't need to meet the taxpayer physically, but the taxpayer has, many taxpayers have attested to it, that despite the fact they don't see us physically, we are efficient in what we are doing. When we say double taxation agreement, some people call it tax treaty. So we are still saying the same thing. In fact, some says double taxation convention. So, but before we can talk about the agreement, we need to first understand what is double taxation. Double taxation is a situation where one taxpayer is subject to tax more than once in respect of a single income. So, for instance, you derive income from Nigeria, and that income is taxed more than once in two different jurisdictions. And it happens because of differences in the domestic law of jurisdictions. Let me give you one instance. When we talk of resident determination, our criteria for determining our resident may be different from the criteria other countries use in determining their resident. So what it means is that while we are saying this person is a tax resident, we are taxing that person, the other country is saying, oh, this person is my tax resident, and they are taxing the same person. And what that means is there will be taxation in two jurisdictions. Also, under our domestic law, we tax our residents on worldwide income. We also tax non-residents on their income they derive from Nigeria. So if we have taxed somebody on income derived from Nigeria, and by the time the person goes to his country and that country is also taxing that same income on worldwide basis, then that means that income is taxed twice. So to prevent or eliminate that double taxation. That is why countries come together to negotiate an agreement. So in essence, that agreement is for the purpose of ensuring that in respect of that income, that person is not taxed twice. But the agreement also do more than double taxation. It's also helped prevent tax abuse. So it's also served as a form of cooperation between those two countries to ensure that their taxpayers don't escape taxation, either through evasion or avoidance. So they collaborate in many areas, especially through exchange of information or through assistance in collection and other processes. In taxation, what determines how somebody is taxed is whether that person, and the extent to which that person will be taxed, is whether that person is a resident or non-resident. So if that person is our resident under our law, that person is taxed on his worldwide income. What does that mean? It means your income wherever that income is coming from. And it doesn't matter whether that income is brought into Nigeria or not. For instance, you can say, oh, they pay me salary abroad, let me keep the money in my account abroad. It doesn't stop taxation. So as long as it is your income, whether you are brought into Nigeria or not, and as long as you are a resident, that income is subject to tax in Nigeria. However, because the fear may be, then I hope I'm not going to be subject to double taxation. Now, because it's also possible that the other country might have taxed that income. And that is why one of the benefits of these new tax laws, we have a section on Section 119 on unilateral elimination of double taxation, unilateral relief of double taxation. So if such person has paid tax on the income abroad, and we are saying we are going to tax the income in Nigeria, so that section allows that person to claim relief in respect of that tax that have been paid abroad. So what is the person simply need to do is compute your tax in Nigeria based on your worldwide income. Then the tax you have paid abroad, remove it, and the balance is what you pay in Nigeria. So in that process, the person doesn't end up paying tax twice, because in this instance now, it is no longer twice, because what you have paid abroad, we are giving it back to you as credit, as a relief. So that is for our resident deriving income from Nigeria. It may be different if there's double taxation agreements, because if there's double taxation agreements, it means that the person is here, is a remote worker. So that means that employment is not exercised abroad. So under a double taxation agreement, that income will actually not be taxed abroad. It's only Nigeria that will have the right to tax the income under a double taxation. So in that process, there will actually not be a double taxation.
Over now to Swateku for what's on the net.
Good day and welcome to What's on the Net. My name is Joyce Swateku. At Ismail Lawal is asking, we are having these issues on Ref 360. We don't understand the period for weekly remittance of EMTL. I work with a microfinance where we have a long list of withholding tax. The challenge is how to populate payer ID for customers or vendors in remitting withholding tax. For Ref 360 EMTL, select the relevant week based on the transaction period being remitted. For withholding tax, the payer ID is the TIN of the customer or vendor from whom tax was withheld. Where a TIN is unavailable, ensure the beneficiary's details are correctly captured and updated with a valid TIN when available. For further assistance, kindly contact Ref 360 support. Tiamiyu Adebayo is asking, I was trying to file a withholding tax. I tried it for a whole day, checking the tax liability board each time, but I couldn't successfully submit. When I finally submitted, I found out that I have two of the same withholding tax. Please, what do I do to remove one of them? If you mistakenly created two identical withholding tax liabilities and one was submitted in error, kindly raise a support ticket or contact the relevant tax office for assistance with reviewing and resolving the duplicate entry. Please provide the liability reference numbers and any supporting details to facilitate prompt resolution. Over to you, Laurie.
And that's a wrap on this edition of Tax File. We hope today's discussion has helped you see taxation from a fresh, more practical angle. Remember, learning about tax is not just about compliance, it's about empowerment. Stay connected with us on social media, share your thoughts, and let's keep the conversation alive. I am Laurie Bala Hassan. Thank you for watching. Until next time, stay curious, stay compliant, and keep watching Tax File. NRS, together we rise, together we prosper.